What's up, everybody? I'm back from my hike. You can check it out. I uploaded a video of today's hike on the Skyline Trail on Mount Rainier, Washington. It was really nice. So, what happened today? We had a stronger than expected retail sales figure for August. Market again took that as some, sign like the Fed's going to tighten. I mean, it's ridiculous. We also had weekly unemployment claims up by 20,000. So you had another one of these crazy, panicky reflex reactions in gold, okay? In the dollar. Stocks, initially they were up, then they sold off hard. Then they ended up mixed. I mean, Dow was down a little bit. NASDAQ was up. Let me talk first about gold. These pullbacks in gold, if you understand what's going on here, they're being totally, by the way, I'm staying here in some Airbnb in Washington State, not far from Mount Rainier. There's nothing here, man. There is nothing. We tried to go get some groceries, man. There's just like a little general store. Basically, all they had was like, it's like a really, really stripped down. If you ever go into one of these gasoline, quick markets where they sell like chips and cookies and coffee and stuff, it's like even a stripped down version of that anyway. So if you understand what's going on in gold, and also the same thing with the dollar and a lot of these commodities and markets, is that you have classic, man. This is classic. The knee-jerk reflex reaction on the part of really know-nothing, highly emotional people in the market. I'm not even going to call them traders. They're not traders, just people in the market, And it's not just people. These could be banks, folks. These could be banks. These could be institutions. I mean, it's again, this reflexive, ridiculous, highly emotional reaction. So, they sold gold off hard. I'm not a gold bug, but I trade it. It is a tradable commodity. I like to trade it. If you know what's been going on in gold, every single dip, I mean, going back as far as you want to go, like at least in recent memory, producers and swap dealers, those are the bullion banks, those are the gold banks. They're in there buying every single dip. Producers are buying every single dip, or they're covering shorts. Same thing with the swap dealers. They're buying every single dip, they're covering shorts. Same thing going to be here. You have really, really good, strong money, smart money support under the gold market that buys on every single dip. So, and by the same token, on the flip side of that, they sell the rallies. When you get these rallies, like I put that out there to my subscribers when we traded up, last week, like around 1830, 1820, 1830, I'm saying get out, take your profits, because those same guys, the swap dealers, the banks, and the producers, they were selling up there. So, but you got to buy it on the when it pulls back like this, because that's the deep pockets. Those are the guys with the deep pockets, and they're in there every single time. So this is going to be no different. All right. Now that I've addressed that, let me talk about same thing with the dollar. I mean, the dollar was weakening a little bit earlier this week. And then boom, today you had that retail sales number, and boom, the dollar shot up. You sell into that. Same breakdown in terms of market composition. Dealers, they're selling the dollar every time it rallies. Now, the question is, by the way, same thing with treasuries. Treasuries went down today, yields popped up, same thing there. What's causing this kind of, and for some of you, this may be really, really frustrating. I have a lot of years in the market. So, I mean, I see something like this. This is the kind of market that can chop people up to ribbons, especially unsophisticated market participants, novices, whatever. They see it going up, they buy. Next thing you know, it goes back down. Or they see it going down, they go short. Next thing you know, it's popping back up again. Why is this happening? You might ask yourself, why is this happening? Why is it so difficult? Why can't it break out in one direction or another? you're in kind of like an equilibrium phase right now. I've been trying to explain this to people where you have this situation ongoing with reserve balances. And by the way, I got to check the numbers today because they come out every Thursday on the Fed's H4-1 release. So reserves are at levels where the banks are selling into these rallies to, they're using trading assets to adjust their asset position. Reserves keep piling up. They're using rallies to sell to, like I said, it makes room on their balance sheet. Somebody asked me, well, Mike, why is it so hard for banks to lend? I mean, I've been over this so many times. Banks can only lend dependent on their capital relative to their assets. If they have a certain amount of capital and all of a sudden their assets go way up, that's it. I mean, their capital is basically spoken for. They would either have to raise new capital or get rid of some assets to make loans. On the downside, when things go down, you still have very good fiscal support in the market. So that's what's, that is what is corralling or keeping this thing in this kind of trading range. Now, it's going to break out one way or another at some point when these conditions change. And what's going to cause the conditions to change? I'll tell you what's going to cause the conditions to change. Something's either going to happen with fiscal flows, and that could be, the Treasury just hits the wall in terms of its ability to make payments with extraordinary measures, and the debt ceiling really hits, and then you're going to see not a huge slowdown in fiscal, but you're going to see some slowdown in the fiscal flows, and then we break down, market breaks down. You probably again get people going in the dollar. They're going to be buying treasuries, the safety trade, right? Maybe gold will go down some more. Or you get an increase in the debt ceiling, which that, frankly, I hope is going to happen because it makes me so damn angry when I see these idiots in Congress. I mean, first of all, we shouldn't even have a debt ceiling. But second of all, the way it's being used now as a political weapon, it's a disgrace. It's a disgrace. We're the only country that does this. I mean, some other countries have a debt ceiling, but they don't pay any attention to it. I think Australia has a debt ceiling. They don't pay any attention to it. It's an anachronism, a throwback to the days of the gold standard. It was implemented in 1917. I mean, you don't need it. It's ridiculous. So at some point, these conditions are going to shift, and then you're going to get a move out of this range, and then this choppy, back and forth action like this. Some of you may be getting blown out right here because, you're buying when it goes up, you're selling when it goes down, and then it just reverses. Best thing to do here is just sit on the sidelines or take advantage of the opposite trade, like what I was saying, like the gold dip today, you can buy that. Or the bond dip, you could buy treasuries. Or the dollar rally, you could sell into that. Or the stock market dip, you can buy into that. For now, we're going to see how this resolves. It's going to resolve one way or another. But that's what's going on. All right? It's very understandable when you know the dynamics involved, which I do. All right, that's it for today, folks. Check out my video. Maybe some of you already have on the hike on Mount Rainier. Beautiful here in Washington State. I wasn't thrilled about Seattle. Sorry, Seattle. But Washington State really is a beautiful state. All right, see everybody tomorrow. Bye-bye.